For more on the record run for metal prices, we're joined by Paul Harris. He's a portfolio manager at Harris Douglas Asset Management. And thanks as always for joining us, Paul. We appreciate it.
My pleasure.
What are your thoughts on what gold is doing right now and the little run it's had? We saw that the drop earlier, about a month or so ago, but that seems to be long in the past. What's fueling this run right now?
Well, I think a lot of things that you've already talked about. I mean, one is kind of the geopolitical issues that are facing the world. So whether it's Venezuela, whether it's Russia, Ukraine, that continues to be just to give you a strong base to why you want to own gold. I think also the other thing is that there's been sort of this massive increase in fiscal deficits around the world, right? And I think that sort of people are really worried about kind of the monetary value of their currency anymore. And so I think that's helped gold a lot, as it sort of, kind of people felt compelled to own Bitcoin to a certain degree for that. So I think that's another reason why you're trying to see kind of, gold and be so strong over the last little while. So I think the other thing is that the other thing we have to remember is that the U.S. is going through a very unique situation with the Federal Reserve, where you're going to see somebody new at the Fed, and that decision is going to be made either later in this year or early next year. And I think that people are sort of concerned about who that person is going to be, whether they're going to be an individual that will actually take their job seriously, as opposed to being a substitute for the president of the United States. And I think that's really important. And so gold is kind of reacting to, I think, looking at those issues and determining whether we're going to see a more normalized Fed with Powell leaving, or a Fed that is, has much more to do with pleasing the president. And I think that's really an important part. And that kind of those monetary issues are really important. The Federal Reserve is the most powerful central bank around the world. It sets a lot of things, that how the world kind of how interest rates will look, all those other things. So I think that's one of the things. And finally, I think that even we saw sort of what was perceived as good inflation numbers, I think the tariffs and all these other things will definitely have much more of an impact on the U.S. economy in 2026. And I think the gold is reacting to maybe what you're going to see is, higher inflation numbers as we go into 2026, because the inflation numbers that came out were very they weren't, I think, although they looked good, I think people were very worried because of how they've kind of structured them because of the shutdown, et cetera. So I think there are a lot of questions about the inflationary numbers, and I think you'll see more clarity on that in 2026.
Just going back to the Fed, if they do get a cut replacement, what kind of an impact would that have on gold?
Well, I think that one is that is if the cuts are perceived because are done because of the fact that the economy is slowing and all those other things are happening in the economy, that's a very different story. If the data shows all those things, I think the worry is that the data won't show that you'll have people on the Fed that just say we're cutting rates because the president wants that, and whether the Fed the Fed is an independent organization, right? And so that will disappear, and so the ability for anybody to trust what the Fed is going to do will hurt the world and also the U.S. economy, because it could lead to substantially higher inflation if the Fed cuts too much as opposed to cutting because the data is showing that the economy is weak, right? So I think that's the whole problem. So if you have a Fed that is doing something because the president wants to, like happened with the Nixon era, where you saw a massive increase in inflation, I think that's what the economy and even the bond market to a certain degree has been worried about, because when you saw inflation numbers come down or even interest rates come down, the bond market in the long end went up. So the bond market is unsure about where all these things stand.
And what are your thoughts on, I've heard talk of $5,000 an ounce for the end of the year. Is that a possibility?
I mean, I think there's lots of momentum in gold and in silver right now, and I think that that's a real possibility when you see that kind of momentum in any kind of asset class, right? So, and the other thing, of course, is many portfolio managers didn't own gold or don't own any gold because they don't see it as in a similar way as maybe other institutions do, and so now towards year end, they don't want their portfolios to say, "Oh, I didn't own any gold." So they, sometimes there's a momentum based on putting in certain things at quarter end, in the stock portfolio, or in this case with things. So you may see that may be creating some momentum in gold as well.
All right, and with silver, some safe haven to it, but some different factors that are driving it, and it's outperforming gold this year.
Yeah, I mean, the gentleman you had on talked about it as it's become much more of an industrial commodity. Gold is really not an industrial commodity outside of it's for jewelry, et cetera, or held as some kind of a monetary offset, where silver is used in some industrial methods. So I think that's helped silver a lot. And silver, you have this kind of thing with silver where it attracts gold, and you have this kind of occasionally where it outperforms. And I think that's what's happening now because people are looking at it as, oh, I don't want to buy gold, but I'll buy silver because it was cheaper at the time, right? So maybe that's helping out silver a little bit here, and the fact that it's being used as an industrial commodity.
All right, and what about, we're almost out of time, but copper and then even like platinum and palladium?
Yeah, I think all these metals have had sort of this kind of momentum because of what's happened with around the world. Copper certainly because it's used, as an industrial metal, and you've seen certainly a lot of issues with build out of data centers and all these things, and so it's definitely that's one of the reasons why copper and also all these metals have certainly gone up because there's been huge momentum on that side that the economy needs a lot of these metals. And so I think that's what's really helped the metal sector and helped the stock market in Canada, right? Because you've seen we're very big in metals and minerals in this area. So I think that's really helped the TSX. But I think that, when you have a momentum with these kind of things going up, all of them go up together, right? And I think that's exactly what's happening right now.
Okay, we're going to have to wrap it up there, but Paul, thanks as always for joining us. Always a pleasure, and all the best for the holidays.
My pleasure. Thank you.
Paul Harris, Portfolio Manager at Harris Douglas Asset Management.